As you said, the Fed are meeting tonight. That's a good place to start with Angus Coote from Jamieson Coote Bonds. Angus, great to have you in this morning. So what's your prediction? Are they going to hike?
Thanks very much for having me on. Yeah, absolutely, they're going to hike. They'll hike 25 basis points. There was a lot of conjecture only a few weeks ago whether it would be 25 or 50, but it will be 25. Obviously, the war in Europe has pushed back those 50 basis point calls. That's not to say that they couldn't do 50 basis points in subsequent meetings. But 25 tonight. I think the most interesting thing tonight is where the dots are forecast to go from the members. Currently, 250 basis points is priced in. It will be interesting to see if they push that out, and see what happens there. I think that all eyes will be on that. With regards to what Evan was saying on markets and stagflation, I think that there is a risk. I don't believe his point on growth. I think that there's a real risk, and the bond market is certainly telling you this, because we're getting very close to an inversion in that 210s curve. Obviously, QE wind off, war in Europe, oil, and then the fiscal drag that's coming through is seeing some real worries from the bond market about a potential recession coming late this year and early next year. And you're starting to see some of the investment banking community openly talk about that. We've currently got 7 hikes priced in. That's one every meeting for the rest of the year, 10, 11, 12 hikes there in total. So it's going to be very interesting to see how growth performs throughout that. Obviously, a massive amount of headwinds with what I just said with regards to oil, war, and the fiscal side of things. So it's going to be very challenged to see how growth performs through that. And it's not surprising to see bond market, starting to want to go longer duration and buy that 10-year sector.
Yeah, interesting, Angus. So we're just talking about that too. As far as oil is concerned, it's suddenly turned from a supply issue into a demand issue, given what's going on in China at the moment. So we've just been talking about the effect of China, which is obviously much more relevant to Australia. How do you see that playing into the current narrative?
Yeah, look, I agree with Evan on that. I think that the Chinese lockdowns are certainly inflationary, given the amount of goods are produced there. That's going to be interesting to see how it plays out. Obviously, their vaccination rates are a lot lower than the Western Hemisphere. They clearly want to stamp it out, and that's obviously going to have an inflationary input. If you're a conspiracy theorist, you'd probably think that Russia and China were in coercion with regards to inflation. Obviously, Russia with regards to oil, and then China with regards to goods. East versus West, maybe it's a new paradigm we're going into. But China is certainly a very interesting one to watch, and it has implications everywhere. So now, if we do go into a recession, does that taper some of the hikes that it's in the market? That's quite a possibility. We'll see how. There's certainly a lag effect with regards to the first rate hikes coming through. It's generally about 6 months. So it'll be interesting to see what happens early next year when these rate hikes start to bite.
Well, let's talk about the implications when it comes to here at home, Angus. The outlook for Australia and the perspective when it comes to the RBA. What are your thoughts?
Yeah, look, the RBA is an odd one out. They're certainly reticent to hike, and that's certainly been in the language up until recently. They've changed their tune somewhat over the last few weeks. They're going to be, I think, forced to hike. The bond market and the RBA have very different opinions of where interest rates are going. Currently, there's 6 rate hikes priced for Australia in the next year. The RBA, as I said, very reticent to start hiking interest rates. We think that they'll probably hike 15 basis points in August. We obviously have a federal election coming up. They want to see another CPI number, which is on the 26th of April, before really deciding what they're going to do, and that leads into an election. But I think that they're going to be forced to hike. They're certainly on the back foot. We don't have the inflation problem that the rest of the world does, but it is creeping up somewhat. Obviously, a commodity exporter, things are running a bit hotter than when they were late last year. So it's going to be very interesting. It'll be the first rate hike we've had since 2010. There's 1 million mortgage holders that haven't experienced that. It will be very interesting to see how the housing market copes with that. And just with regards to the terminal rate, the investment banking community have a sort of a range of 1.25% to 1.75%, 2%. There are some outliers that are a bit higher than that. So we do have a way to go, and it's going to be very interesting to see how the economy copes with higher interest rates. And I think there are sectors out there that don't fully appreciate that rates are definitely going to go higher. So the bond market's got a terminal of 270 at the moment, so a long way to go.
When you say there are sectors out there that don't appreciate how high they're going to go, which ones are you talking about specifically? And you mentioned housing as well. Clearly the RBA was going to have a close eye on that, given how leveraged some mortgage holders are, particularly at the lower end.
Yeah, I think that's going to be where the pain is felt with these higher rates. I don't think it happens immediately. As I said, there's a lag effect to interest rate hikes, so it's a 6 month thereafter, and 15 basis points is obviously a smaller amount. Some of the rates have already been passed through because the bond market has priced that. I think the real issue is going to be in 23 for Australia, and that's in particular the third quarter, where you're seeing a huge amount of fixed rate mortgages rolling off 2% into high 3s and 4s. I think you'll start to see some pain coming through there. But I do take your point that there is a lot of cash on the sidelines, and hopefully that insulates some of the pain that will be felt in the housing market. I'm not expecting it to go back 30%, but could it go back 10 or 15? Yeah, absolutely. And I wouldn't be surprised if we see that.